Well, good afternoon to those of you tuning in live to today's presentation. Qenos has long been an active participant in the annual Rotomold conference. This isn't quite what we had planned for this year, but we're very happy to be involved, and I think Lisa and Michelle have done a great job pulling together such a novel event. My name is Kate McKie. I'm the Market Segment Manager at Qenos for the Roto segment and also the film and injection moulding segments. Today, I will be talking about the state of the global polyethylene industry and in particular, the outlook for polyethylene price. This is something I've been involved in for many years, but I must say I don't think the situation has ever been as volatile as it is currently. So firstly, an introduction to Qenos. We are Australia's preeminent supplier of PE resins, with plants in Melbourne and Sydney. The Melbourne plant is supplied with Bass Strait ethane and the Sydney plant with Cooper Basin ethane. Qenos and its antecedent companies have been in operation since the 1960s. Qenos has 650 employees and employs another 350 contractors, and we produce over 350 kilotons of PE each year. Qenos also includes the Xsource business, which distributes a broad range of specialty polymers from some of the world's leading suppliers. So Qenos doesn't just make rotomoulding resin. We supply the three major types of PE resin: high density, low density, and linear low density, into a number of different segments used in everyday life. Some of the more well-known products are the plastic milk bottle and the wheelie bin. In the Roto segment, Qenos LL711UV has been the benchmark resin since the polytank industry started in the 1990s. This slide shows our view of the Australian market for rotomoulding resin. We believe it sits at around 60 kilotons per annum, very much skewed to rainwater tanks. At a macro level, we see a very modest growth outlook supported by farm sector output. This chart doesn't really show the very strong demand we've seen over the past 12 months, however, resulting in large part, we believe, from the drought. It will be interesting to see how the rest of 2020 transpires. The New Zealand roto market, which we also supply into, is far more diverse. We see much less reliance on tanks and much more custom moulding. Polyethylene pricing follows a typical commodity cycle. Supply and demand is the most important influence on short-term PE pricing. Starting on the right-hand side, as demand grows, pricing increases. This encourages new capacity, but increasing prices can also discourage demand. As demand falls, price decreases, and this results in an excess of capacity. This causes investment to dry up until demand catches up and the cycle begins again. In the polyethylene industry, supply is much easier to forecast than demand. New polyethylene plants take at minimum 5 years from announcement to commissioning, so we have a good idea of what's coming down the track. Demand for polyethylene is driven by a range of economic factors, including GDP. COVID-19 has created a demand shock like no other, and it is not yet clear how the next 12 months will play out. Globally, the World Bank is forecasting negative 5.2% growth this year, followed by a 4.2% recovery in 2021. Southeast Asian polyethylene demand has shown constant growth since 2000. This chart shows the percent demand growth for linear low PE in Southeast Asia. This includes all the different applications predominantly film grades used in flexible packaging. The roto segment accounts for approximately 5% of Southeast Asian linear demand. Whilst PE has been an incredible growth story for the past 2 decades, it seems certain to change in 2020. China was the first country where demand fell away, but it has already rebounded. In the Southeast Asian countries, demand has fallen, and the rebound will depend very much on how successful the virus containment strategies are. And here we have Southeast Asian linear low demand, 2019. Globally, some forecasters are predicting PE demand will hold up reasonably well in 2020, rather than decline like many other commodities. Demand for many PE items has increased as a result of COVID-19. Personal protective equipment such as gloves, masks and face shields, plastic ventilator components, single-use packaging for medical equipment, and fresh produce packaging as many consumers opt for pre-packaged fruit and vegetables out of fear of contamination. There has also been a move away from recycled resin, partly because it is currently more expensive than virgin resin, but also many single-use plastics are back in favour due to the hygiene benefits. This will no doubt be temporary, and we expect the focus on sustainability and the circular economy to return. In this regard, polyethylene is advantaged relative to some other polymers as it is inherently recyclable. Qenos has seen the demand disruption from COVID-19 vary across different segments. Flexible packaging demand, such as frozen food packaging and toilet paper overwrap, was strong during April before grinding to a halt in May as many customers found themselves overstocked. Similarly, demand for blow moulding resin surged in April as demand for hand sanitizer and cleaning products boomed. On the other hand, pipe demand has fallen sharply as many larger projects have been put on hold. Also in New Zealand, we saw the roto market and the wheelie bin market shut down for a month. On the supply side, we see a record polyethylene overbuild looming. The line on this chart shows how the global demand for PE has changed each year. The bars show the capacity growth by region. Of note is the orange colour, which shows the large number of PE plants that have started up over the past 5 years in the US due to the shale gas boom. Going forward, the blue colour represents the huge capacity build planned in China. China will still be a net PE importer. However, it will take less PE from the US as the US-China trade war results in a shift in global trade patterns. Generally, since 2013, the supply and demand outlook has roughly balanced. The outlook for 2020 to 2022, however, is for a surplus of 10 million tonnes. And this chart was prepared before the COVID-19 crisis. So if demand in 2020 is 0, rather than the 4 million tonnes shown, the surplus will be 14 million tonnes. So apart from the supply and demand balance, cost is the key factor determining PE price. Over the long term, global PE prices are ultimately a function of production costs plus some level of margin. In the short term, competitive cash costs set the floor prices on both a global and regional basis. Feedstock represents a large proportion of the cost of producing ethylene and hence polyethylene. Some of you may have seen Qenos mentioned in the media recently. Our CEO, Steve Bell, has been lobbying hard for the manufacturing industry, in particular for a resolution to the East Coast gas crisis. The predominant Qenos feedstock is ethane, which is found in natural gas. Globally, feedstock prices have always been volatile, but the recent collapse in oil prices has taken volatility to a new level. Naphtha, which is the feedstock most widely used in Asia, has fallen in close correlation with oil. This has reduced costs for Asian PE producers, especially relative to the ethane-based US and Middle East producers. This is expected to be a temporary situation, however. So the net result of the collapse in demand and feedstock costs is some of the lowest PE prices for many years. This chart shows a short-term PE price forecast for the next 12 months. Our third-party pricing consultant, IHS Markit, has provided this for us, so I can't share absolute figures, but using June 2019 as the base, you can see the trend over the past 12 months has been down, and there is very little recovery forecast until next year. This is the same style of chart, but going out to 2024, with 2013 set as the base year. The outlook over the next 3 years shows the impact of a recovery in the oil price. The recovery is modest, however, because of the large capacity overhang. So in conclusion, polyethylene resin follows a typical commodity pricing cycle. Polyethylene pricing is market-based and is influenced by demand, supply, and costs. Pricing moves constantly. The COVID-19 pandemic is impacting demand and costs and will keep prices down in the near term. Thank you.